What's up, traders? So let's do a complete multi-time frame analysis of gold. Let's see what kind of trading opportunity we have in this instrument. Now, first let's start with the bigger picture, monthly time frame, and then we'll look at the lower time frame to see which way we can trade gold. Now, why? Because monthly, weekly will give you a clear direction in the market, removing all the noise from the lower time frame. Now, if you look at the bigger picture on gold, what you see that this is the monthly chart and there is a movement to the upside here in this long term bull market, and we have seen that gold failed to create new higher high. Instead, it has created a lower high, and then we have seen a strong rejection. And when the price was here every time I made the analysis, this is what exactly I mentioned, that because gold has created a lower high, it might create a new lower low, and gold did exactly as it is. I'll link this analysis below this video for your educational purpose. Now at this point, let's see what happened with gold. This is the monthly chart, and we need to pay attention to the support zone where the gold currently have bounced. Now this level is quite significant. Why? Because you can see the back to back two monthly long doji here. This doji is giving us a very strong level of resistance on this zone. So this left resistance now acted here as a support. From here we have seen a movement to the upside on gold. Now the price came down to the same level, and then we have seen a full bounce creating this long doji on the monthly. Now after this bounce, we have seen the price created this movement, and in this movement we have seen gold has failed to create a new higher high, and again the price came back to the same level of support, and we see now a rejection. So what all this mean is that because this support is very strong, and every time the price was coming here having a strong bounce, and because this market now is overextended to the downside, from this support we can expect now a significant retracement. So because it's a long move, let's find out how much retracement we can expect on gold. To do that, place your Fibonacci from the this is the starting of the move to the end of the move. Let's say that what is the minimum Fibonacci level is 38.2%. So with that in mind, over the next month or later, we could expect gold to go up to do at least 38.2 Fibonacci level, which is also a test of this trend line. You can see that this dynamic support, long-term support on monthly, support here, this support has been tested, has been broken, has not been tested here. So we can look at now gold for an upward move for long-term direction. Now looking at the weekly, we can see that this is the weekly time frame, and this is where we have seen that this support on the weekly has been broken, and then we have seen from here we have seen a rejection to the upside. Now we have to keep in mind that this is not always mandatory that gold will go up and test this previous support as resistance. At any point we could see this continuation to the downside and break out from this level of support. Then how we will be monitoring or predicting the market? Now let's look at the daily time frame to see what it is doing. Now on the daily time frame, we see kind of reversal pattern, but it's still not confirmed. So what's the reversal pattern? You can see the price came down here, created this kind of inverted head and shoulder. When you see this kind of inverted head and shoulder, we can expect a reversal, but only a head and shoulder, inverted head and shoulder may not be enough uh, confirmation for longing gold, because it's a long-term bearish market and we have to be cautious in trading this market. So then what situation we will be considering on gold? Now if this inverted head and shoulder is valid, then it has to break out from this inverted head and shoulder, needs to test this neckline, and then we can say that okay, the gold is reversing, now we can consider going long. So let's find out the levels that we are expecting the price to now break and respect. So let's draw this level of support and resistance, and let's go to the intraday or 4 hour time frame. So this is where I'm expecting now that if gold is going to break this level, this resistance for a bigger move to the upside, then we need to see that gold is creating a series of higher low in this zone, a kind of bullish structure. So if only gold does that, if we see that gold is creating like a series of higher low and breaking out of this zone from this inverted head and shoulder on the daily time frame, and then we'll wait for a retest of this previous neckline, previous resistance as support. In that situation, we'll be considering going long on gold from this zone with a high risk to reward ratio with our students. On the other hand, if we see that gold just consolidated in this zone, consolidating and creating a series of lower high, that means that there is a probability that gold will continue to drop. In that case, if we see that the bearish price action has been created, series of lower high along this zone and preparing for a breakdown, we will consider going short from this zone with a high risk to reward ratio with our students. If you find value in this analysis, then smash the like button, and also don't forget to drop a comment below to help this idea. Thank you for watching. See you soon in my next analysis.